Good morning, everyone. A very warm welcome to the 27th Indirect Tax Colloquium May 2025. I would like to introduce you our speaker, Mr. Vivek Jalan, who is a qualified CA, MBA, and a qualified LLM and LLB. He is the chairperson of the National Fiscal Affairs and Taxation Committee of BCC and I. He is the regular speaker of various professional forums on the key areas of direct and indirect taxes. During the session, please put your videos and microphone off. If anyone has any query, please write it in the chat box. We will answer all your queries at the end of the session. Now, I request Samir sir to say a few words. Over to you, Samir sir.
Amir, you are on mute.
Samir sir, you are on mute.
Can you hear me? Can you hear me, Vivek?
Yeah.
Yeah. Good morning, Vivek. And thank you, Deepa, for the introduction. So, thank you all the participants. Good morning to all the participants for joining us today. We conduct all this indirect tax webinar every month, and we try to cover all the developments that has happened over the period of last 1 month, so that and recap it. We try to cover both the direct taxes, if there is something very important there, as well as the indirect taxes part. So we have a lot to cover in this session. So I request Vivek to start with the session and take us through this your presentation. Thank you, Vivek.
Thank you, Samir, for the opening remarks and setting the tone. And thank you, the participants. Thank you, Team Tax Connect and Deepa, for another indirect tax colloquium managing the show. And we'll start. I'll just share with the PPT. Is the PPT visible?
Sir.
Yeah. So, see, we have a lot of topics to be covered in today's webinar. And although after our last webinar in February, I think, a colloquium, after the budget, not much, the GST Council meeting has not happened, but a lot of developments have happened. And most important is this ISD implementation from 1st of April 2025, where most of the taxpayers are concerned about. There are a lot many questions which are floating around, even around after implementation of the ISD. What to route through ISD, what to route through cross charge, whether to take ISD registration or not. And of course, like always with every change, people have their views, consultants have their views. We will discuss all such questions which have been posed before us through various taxpayers and our views in the matter. Lot of changes in the GST returns. Every change in the GST return would certainly have a revenue angle attached to it, right? And we'll discuss the changes in the GST returns. What can be the possible revenue implication on the taxpayers and how to prepare for it. Input tax credit, always a dispute when you take C plus S instead of I, whether the department can deny, etc. In what circumstances the department can deny. GST on usage of brand name, a big dispute from 2024. and very recently, the adjudicating authority in Mahindra and Mahindra's case, they have dropped certain part of the demand. It was in the media, while adjudicating orders are not published in the portals. It was there in the media. So we'll discuss our views on GST on brands, GST on clubs and non-profit organizations. Apropos the recent division bench judgment of the Honorable Kerala High Court, well, we have got many of the non-profit organizations, associations saying that we should stop payment of GST on our members' collections, etc. Apropos this order in Indian Medical Association. So we'll discuss our views on that. You must read the entire order before taking such a call as to stop payment of GST. Customs Supreme Court judgment in Coal India case on the valuation aspect, very, very important, and various other developments, including various Supreme Court judgments in GST cases, Rule 86A, blockage of input tax credit on the portal, job work valuation, we will discuss because, job work, valuation of job work is something which keeps even certain consultants confused, those who may not have practiced central excise. And of course, the GST rules have come out on 24th of April 2025. Now it is high time that all the taxpayers should get their petitions ready. So we'll discuss the GST rules not from the consultants or the advocates perspective per se. This is not a forum where we do deep into the advocates perspective per se or the AR's perspective, but more from the industry angle. So we'll start with the most critical of them all, that is ISD versus cross charge. And we have been, as I said, getting many questions over the last 1 month. Many CFOs are asking, do we need to take an ISD registration? What happens if I don't take an ISD registration? One of the taxpayers and one of the very large and very renowned consulting organizations, they took a view that when you pay reverse charge mechanism on the royalty paid to the mother country, then you pay the reverse charge for royalty, thereafter route it through cross charge, showing that it is a facilitation charges for business, etc. Right? So you see, we'll share our views, and the similar thing happened in the case of JSW, and Odisha High Court came down heavily upon in that case, and it did not pass a favorable verdict. So many other such questions are there. What would happen if I don't take ISD? How would the department come to know whether I'm cross-charging or I have routed it through ISD registration, etc., etc. We'll discuss all of that, and certainly how the artificial intelligence we all know, which the government uses, can detect, and how it may lead to notices going forward. So it all started from the very beginning when this concept of cross charge was envisaged. It was our view from the very beginning that cross charge, specifically of third party services, cannot be done. There is no concept called cross charge in GST, and therefore for third party services, if you are cross charging, it was not the right way to go about in the GST era. However, to ward off the earlier litigations, to not propagate litigations, the GST Council had issued circular number 199, which said that for the past periods, this circular 199, it was issued in 2023. So the GST Council through CBIC, they have held that for the past periods, whether you do cross charge, whether you do ISD distribution for third party services which were received by the HO, both would be equally accepted. So all the litigations for ISD versus cross charge, they were put to rest after this circular 199. The circular also said, in fact, the GST Council meeting minutes, the 50th GST Council meeting minutes, it clearly said that going forward, we will make ISD mandatory. You go through the 50th GST Council minutes and they have clearly specified that. And from 1st April 2025, they have done it. For internally generated services, right, I'll go to the next slide. Circular 199 for internally generated services. What are internally generated services? Say the CFO of the organization, he is giving or she is giving the service to all the branches, not only the HO state. So for such services, cross charge can be done, may not be done. If cross charge is not done for such services, internally generated services, then the value of such services of such CFOs or such other internally generated services, that would be considered to be nil, right? That would be deemed nil. That was provided. The another question was asked, okay, for internally generated services, even if we don't do cross charge, the value would be considered to be nil. No GST would be applicable where the counterparty can take input tax credit. What about a case where counterparty, that is the branch office, cannot take the credit? There also, this circular 199, it had said that even when counterparty, that is the branch office, cannot take the input tax credit, even in such case, no GST would be considered to be applicable. But please note, on your screen, you can see the word actually highlighted in red. The circular very subtly states that it is not that you can go left, right, and center and cross charge. The services should have been actually rendered to the branch office, right? So if you are saying the head office has rendered a service, that should have been a service which is actually rendered to the branch office. You just cannot cross charge at your own choice, right? So in this backdrop, the input service distribution mechanism that was made mandatory from 1st of April 2025. And when it was made mandatory, specifically in April, CFOs and CXOs, managing directors specifically, rightly so, they started asking a question. Why should I go through an additional compliance of ISD? What happens, say for example, a multinational company, what happens in case I tell my head office, my mother company, to raise royalty invoices on various states in India, right? So for example, your mother company is in United States. You are registered in Karnataka, West Bengal, Maharashtra, Haryana, and Tamil Nadu, 5 states in India. So you ask your mother country to raise 5 royalty invoices on these 5 states. These all 5 states pay reverse charge and take the credit. Similarly, you tell your statutory auditor to raise five invoices. You tell all your consultants to raise 5 invoices. Why can't I do that? Which is logical also. Do I still need to take ISD distribution? So section 2 subsection 61 of the CGST Act, which defines input service distributor, that was amended, and it says the amendment on your screen, the major amendment was that an input service distributor would be liable to distribute input tax credit. So all such questions were correct if you see only 2 subsection 61. That yes, only if you have input tax credit, only then you will be liable to distribute. If you don't have such input tax credit, or if you don't avail, say for theory's sake, your head office says, okay, head office rent is only minuscule. I will not take the input tax credit. I have no common ITC. I will not distribute anything. I am not a input service distributor who is liable to distribute input tax credit, right? However, please note section 20 subsection 1 was also amended. Now, what did 20 subsection 1 say? It says any office of the supplier of goods or services or both which receives tax invoices towards the receipt of input services, including those under cross charge, shall be required to be what? Registered on your screen in red as input service distributor and shall distribute input tax credit. So, section 20 subsection 1 says any such head office, forget input tax credit, forget availment of input tax credit. What is the mandate to take input service distributor registration under 20 subsection 1? Only if the head office receives the common services, not the input tax credit. If the head office receives common services, then it shall be registered as ISD and it shall distribute the input tax credit. Input tax credit as per rule 39 would mean eligible as well as non-eligible input tax credit. So ISD mandates you to distribute not only eligible but even ineligible input tax credit, which needs to be noted. With this, I take you to Rule 39, right? Rule 39, as I said, if you see, so let us start one by one. Rule 39.1. It is very important, friends. I got a question around 5 years back, right, on this. So many of the taxpayers at that time, GST was new in 2018-19, they took input service distributor because they had such registration in service tax regime also, but they just took, mechanism was not built in. So they said, sir, we file nil input service distributor returns, nil GSTR 6 returns in 11 months. In 1 month, in the month of March, we distribute for the whole year. Would such input tax credit be ineligible to my branch office because I have not distributed in the same month? Friends, if you see Rule 39 Sub-Rule 1 on your screen, I have highlighted the word same month. So it says 39.1 that ITC available for distribution in a month shall be distributed in the same month. So it is not that you file nil input service distributor returns for 11 months and then in the month of March 26, we can distribute everything for 12 months at a go. Or every 6 months, we distribute, 5 months, we file nil input service distributor returns, GSTR 6. Whatever ITC is available in the same month has to be distributed in the same month. So you might take a view that whether ITC is available or not that depends upon the taxpayer. However, you have to have sufficient reasons to prove why you are saying that ITC is not available, even though it is reflecting in your GSTR 6A. And more so, even though you have made a payment to the supplier, then why are you saying ITC was not available? You have to have cogent reasons. If such cogent reasons are there, then you can say, see, ITC was not available, I thought, in that month. That is why I have not distributed when? In the same month, right? Again, if you see Rule 39(1)(c), it says the credit of tax paid on input services attributable to a recipient shall be distributed only to that recipient. Thereafter, it says, D says, if a ITC is attributable to certain recipients, certain branches. In my example, out of 5, say ITC is such common ITC is available only to 2. Then you have to distribute only to 2. And if it is applicable, like HO office rent, HO is servicing all the branches. So office rent of HO, the ITC for that is attributable to all the recipients. Then you have to distribute to all the recipients, right? But what comes out of this is that many of the taxpayers ask us that, sir, can I, if one of my branches has to pay in cash, can I distribute more over there? The input tax credit, friends, passing of input tax credit without a corresponding receipt of services may be disallowed by the department. Therefore, we must desist from such a situation. We must make very sure that ITC is distributed only to such branches which have actually received the services. In case a particular branch has not actually received the services, we should desist from passing on the input tax credit by the formula wherein or the common ITC is allocated to all the branches, right? And thereafter, there is a certain formula, right? It is a very simple formula, not much to be dwelt upon that. I think all of you would have already done the, you have already applied this formula. Total input tax credit, common credit, which is available for distribution, you divide it into turnover ratio for the relevant period. What is the relevant period? So for that, you have to again come in the explanation, right? I will take you to the explanation. So relevant period, it says last financial year, right? If turnover is available in the last financial year, if turnover is available in the not available in the last financial year, then the last quarter when turnover is available, right? Yeah. So I got a question, HO or rent, ISD or cross charge. I will answer that. Now, so the ITC of C plus S should be distributed as I, ITC of I should be distributed as IGST. So that again, that is a set mechanism. I will only dwell upon the more intricate questions herein. RCM, right? RCM. Now, there was an amendment after that. Even RCM input tax credit, say the HO pays GST on RCM on import of services. What would be the mechanism? The mechanism under Rule 54(1)(a read with Rule 39(1)(a) would be that the HO normal registration would pay RCM through the normal registration. Then the normal registration would bill to the ISD, and thereafter ISD would distribute such input tax credit. Right? So now again another question comes. What about other third-party services? So I have just started my ISD mechanism. I did not have ISD mechanism earlier. So still certain suppliers, it will take 3 to 6 months for certain suppliers to convert from normal to ISD. In this interim period, can I take the credit of third-party invoices in my normal registration and following the procedure under Rule 39(1)(a), bill it to ISD and then distribute? Answer is no. Friends, please go through the judgment of the Honorable Odisha High Court in the case of JSW Steel, where the Honorable Odisha High Court has clearly mentioned that this mechanism of billing to ISD is only for RCM, right? It is a procedure only for RCM, not for all the invoices. Therefore, this can be challenged. I will come to JSW Steel judgment and understanding of that. So, pointers. Is it mandatory to take ISD in case you don't want to avail common credit also? Hypothetically, you don't want to avail HO rent also. In my view, the officer can always invoke a penalty under section 125 of 50,000 rupees at least for being non-compliant and not taking ISD registration when it is mandatory under section 20 subsection 1 in case you receive common services. Right? Somebody has asked me, HO rent should be cross-charged or should be distributed through ISD? I have already answered. The concept is very clear. You have to see whether it is third-party invoice or whether internally generated services. You are taking an office on rent from a third party. Therefore, third-party invoices only through ISD distribution cannot be cross-charged. Only internally generated services can be cross-charged in case the branches have also received such services. Right? Can multiple ISDs be taken? We have already discussed this, I think, in one of the colloquiums. If you see the video on our YouTube channel, yes, you can take multiple ISD registrations in multiple states. What was discussed in JSW Steel Odisha High Court judgment? In such case, the instant taxpayer had its HO in Maharashtra. It paid reverse charge on certain government fees for mines in Odisha. From Odisha registration, it cross-charged such RCM payment ITC received to ISD in Maharashtra and from Maharashtra distributed. Such cross-charge was considered to be as internally generated services for what? For facilitation charges. The Honorable Odisha High Court has said that there is no facilitation as such, and therefore such cross-charge by Odisha registration to ISD in Maharashtra could not be considered correct, and therefore the writ petition was dismissed. A similar question came to us from one of the taxpayers. Sir, one of the consultants is saying that whatever internally generated, whatever you are paying through RCM, route it as a facilitation charges, making it as internally generated services. In my view, with all due respect, and in my legal submission, that should not be done. Refer this judgment of Odisha High Court. As I said, ineligible credit also to be distributed. Even credit notes. For common credit, the credit notes which you have received, even that needs to be distributed. In certain months, it may happen that the reversal of ITC through credit note in ISD is more than the actually ITC available. Then what do? Do you defer? No, don't defer. You have to reverse. You have to actually charge the output tax liability. Even that is mentioned. So this is a very, very typical scenario, right? Now, many of the taxpayers, they say what they do. In fact, I have seen one or two of the taxpayers, every input, every common invoice, they will distribute through the SAP. Not required. In 1 month, you need to make one ISD invoice on one branch, accumulating all the ITC available for that branch for that month. Invoice wise, one-to-one allocation through ISD not required. How can the department catch us, sir? One of the, many of the persons have questioned. It is not a rocket science. For all multi-state registered entities, they will apply and simple AI PAN number wise, whether a person with a PAN number with multiple GSTINs has a ISD or not. If you don't have an ISD, then we understand that you may have to answer certain questions raised by the department. Very careful. For multi-state registered entities, again another AI which we feel might work. Again a simple one. For all the cross charges with a HSN of 99, right? HSN code 99 for services which you are cross charging. The government may run a simple AI and it may inquire whether it is actually internally generated or actually third-party invoices which you are cross-charging. If you are cross-charging a third-party invoice by routing it through, as I said, facilitation charges, then possibility of litigation might be there. Right? And distribution should be made through to SEZ also, right? Some of the questions were raised whether to SEZ do we need to distribute? Answer is yes. Even to SEZ you need to distribute. So friends, this in my view is, all I've answered, try to answer all the questions which were raised to us. Many more questions are there in the chat box. We will take it at the end of the session. We go to the next topic, changes in GSTR1, right? So we all know that the table number 12 of GSTR1, that has been amended, and table number 12 now has two parts, B2B HSN code wise and B2C HSN code wise, right? And the HSN codes, as per the description, has to be selected from a drop down. So therefore, whatever from table 1 to 11, whatever HSN code wise supply you have reported, that you have to fill in table number 12, bifurcating as B2B and B2C, right? And of course, you have a download HSN code list for your facilitation. As I said, each and every amendment in the return would certainly have a revenue implication. In my view, what are the revenue implications which all the taxpayers should be aware of and should start preparing? See, there are various issues even now. Classification issues are gaining ground in GST. Customs, it has always been there. And now if we see the 6-digit HSN codes, for same 6-digit HSN code, there are multiple rates. So our suggestion always is to use 8-digit HSN codes, even though not mandatory for you. Because with 8-digit HSN codes, even if you are charging a lower rate as per another schedule in GST, there might not be a notice. But 6-digit HSN code leaves room for a notice. In case of trading companies, very careful, friends. So for trading companies, HSN code wise, quantity wise, sale and purchase data need to be reconciled. Because trading companies are not making any amendments or not making any changes to the product. So whatever you purchase through whatever HSN code, you have to sell it invariably through that HSN code. Therefore, you must, if you have not maintained, start maintaining HSN wise sale register and purchase register and match it with the closing stock. So opening stock HSN wise plus purchase HSN wise minus sales HSN wise should be equal to closing stock HSN wise. Therefore, whatever HSN code the supplier is charging or applying, that becomes very, very important. If the supplier is supplying to you through a wrong HSN code, then you have to make the supplier amend. You have to liaise with the supplier and make him amend, or you have to charge the same HSN code if you agree. But it would be a risky proposition to not use the same HSN code as the supplier if you are a trading company. Even if you are a manufacturing company, HSN code wise, more or less, you have to have a input output ratio, right? You already disclose input output ratio in the tax audit report. So that input output ratio should more or less be available to you for explanation if you are a manufacturing company also in our view. Very critical would be if the supplier is charging you an HSN code and charging you a higher GST and you are charging a lower GST. Big problem. And specifically if you are a trading company. And a bigger problem is if you are bundling. Say supplier is bundling. Supplier is bundling a 5%, 12% and 18% item in a bundle, and as a composite supply, it is billing you at say 12%. And you are selling the same goods at 28 or 5%. By removing the bundle, this may be a cause of litigation, right? Therefore, furthermore, the disputes of composite versus mixed supply may gain ground. Even the supplier, he might be questioned if his recipient is actually debundling his bundle. In my example, a bundle is created of 5, 12 and 18% rated goods. And the recipient is debundling and selling it separately. A question may be raised to the supplier. This might be a far-fetched thought. But one has to take adequate precautions, right? Composite versus mixed supply disputes may become, more rampant, so to say. So this table 12 HSN code wise, as taxpayers, we must prepare our stock summary HSN code wise, right? At least with a reasonable degree of accuracy, because maybe the department would start requiring that. Another important amendment is in table 3.2 of GSTR 3B. Generally, many of the taxpayers, specifically the MSMEs, they skip this table 3.2 of GSTR 3B. So table 3.1 has all the details of outward supply, SEZ, zero rated, nil exempt, non-GST supply, RCM and all other supplies. This is there in table 3.1. Table 3.2 is a mere bifurcation of place of supply wise interstate supply of table 3.1. So now from table 3.1, this table 3.2 would be auto-populated. If you want to change something in 3.2, you have to change in GSTR 1. I think as of now, they have relaxed this, and even now you can make for this return, you can make amendment in 3.2. What is important is table 3.2 of unregistered interstate place of supply wise reporting is now mandatory in table 3.2 of GSTR 3B. What are the revenue implications? Say so if you are doing B2C, supplies to unregistered persons, right? The most common thing which we do, if we don't know the place of supply or the destination of the goods, to charge C plus S, right? Even if sometimes the goods go out of the state, as a matter of precaution, as a supplier, we charge C plus S. And very recently, the unregistered persons e-way bill has also started. So now if you charge C plus S, and for the same invoice that unregistered customer has made a e-way bill outside the state, then maybe there can be a question from the department, but this would be a simpler question to answer. What would be a more difficult question to answer is when you have charged IGST and the recipient, customer, makes a e-way bill of intrastate, then certainly the SGST department would question this. We all know the SGST department are more keen on CGST plus SGST because the SGST part, they get their direct inflow. So if you charge IGST where you should have charged CGST plus SGST, that can be questioned. Therefore, when for B2C suppliers, how do you protect yourself as a supplier taxpayer? It is always recommended that where you are charging IGST, it is always important to always keep the way bill also for the transaction, where you can substantiate that, see, I have charged IGST and e-way bill is also made interstate. Therefore, my IGST charging for B2C supply, that is correct. All of this might be a precursor for e-invoices for unregistered supply also. B2C supplies also. There are talks, there are very advanced stage talks of implementing e-way bill for B2C supplies also in the GST Council, and very soon it may be there for B2C supplies, e-invoicing may also see light of day very soon, at least for certain sectors. Another GSTIN advisory is very simple for those who have gone into amnesty scheme. In case you are going under amnesty scheme against an order of the Commissioner Appeals, first stage appeals, then you have to go to the Commissioner Appeals and thereafter get an order of withdrawal if acknowledgement has been issued. If acknowledgement has not been issued, then you can do it online. But if acknowledgement has been issued in APL 02, then you have to go to the officer and withdraw it, taking the officer's permission. That online utility is also now available for withdrawing of the appeals with the first stage authority. So a very, very important judgment of the Honorable High Court of Kerala in the case of MJBR Marketing and Financial Services. It reiterated the Honorable Kerala High Court's judgment in the case of Regimon Alex. What was the issue? And most of the taxpayers, they face this kind of an issue. What was the issue? The issue was that when the supplier has charged CGST plus SGST, the recipient, MJBR Marketing, has taken the credit in IGST. The department questioned the input tax credit and disallowed this IGST credit. The Honorable Kerala High Court has stated that as per Circular 192, that Circular 192 was for interest in such matters, but it has stated that as per Circular 192, the input tax credit balance for C plus S plus I, all three should be seen as one common bundle. Even if the recipient has made a mistake of taking IGST credit instead of C plus S, it is revenue neutral to the government and they must bifurcate amongst themselves. It is very important. The last line, if you see on my screen in red, the Honorable Kerala High Court has said that even if there is a loss to the center in respect of IGST in this case, it is upon them to take it up with the GST Council with a representation for appropriate relief. This is a very important sentence because the reverse can be challenged. What happens if a reverse case happens? If you take IGST credit instead of CGST and SGST, because we know IGST should be utilized first. Many of the taxpayers are facing a problem that they have SGST credit balance where they have to pay I and C in cash or C in cash. Can the taxpayers use this judgment and take C plus I instead of C plus S? So this line of the Honorable Kerala High Court's judgment would come to the rescue, because if you see the order, the Honorable Additional Solicitor General, he argued vehemently that this may lead to a loss for center, and the Honorable High Court in this matter, it remarked that the standing counsel's contention is very impressive, but it is not a reason to ignore statutory framework and binding decision of the High Court of Kerala. So the department has understood, the government has understood that this may lead to a loss, right? But the Honorable Kerala High Court has said that still we will pass an order. Center, if they incur a loss, then let them take it up with the GST Council. So this is a very important judgment for all taxpayers, I suppose, because somewhere or the other, this is an issue with most of the taxpayers in one of the years. GST on usage of brand name, applying Mahindra Adjudication Order. So what was the order? Now Mahindra, what we understand from the media reports, Mahindra logo, just like all big companies, Tata, has its logo, and all other companies, ITC has its logo, HUL has its logo. Mahindra's logo was used by various of its group companies. This was considered to be a service rendered by one company who owns the logo to the related party, subsidiary, and other associated companies. The department raised a show cause in this matter, and Mahindra argued as per Rule 28. I will take you to Rule 28, read with Circular 210. The adjudicating order, as we understand, it says that fine, wherever the subsidiary, associate, or related party who is the recipient of such service in the form of brand name of Mahindra, that can take full input tax credit. We have no problem, demand drop. But in case there are certain exempt entities, say a trust, whose output tax liability is that, he will not get the full input tax credit. In that case, we have a problem. In such case, the demand was confirmed. So we go one by one. Schedule 1, Clause 4 and Clause 2. It requires that even if services are received free of cost from related party outside India or through distinct persons, that is the branches or HO, in such case, it would be considered as supply. Circular 199, I have taken you through. It says that value of internally generated services can be nil. It can be nil even in case no invoice is issued, even where the counterparty, the branch, cannot take the full input tax credit. Circular 210, it talks about import of services and states that in case of import of services from related party also, the same analogy would apply. So Rule 28, second provision. Rule 28 talks about valuation in case of internally related party supplies. It says that the valuation should be on the basis of open market value or value of goods of like kind of quantity, or it can be as per Rule 30, 31, residuary rule and other such methods. However, second provision to Rule 28, it says that where the recipient is eligible for full, the word full on your screen is highlighted, friends. Where the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value. So even if you charge 1 rupee, and if the recipient is eligible, related party is eligible for full input tax credit, no problem. 1 rupee would be considered to be open market value. So in the said case, Mahindra did this. When the department disputed, they raised an invoice of 1 lakh rupees on their related parties for usage of brand name, right? Circular 210. Friends, we need to be very careful. Circular 210, para 3.4 on your screen, it says that it has been clarified by that circular 199, which we were speaking about, but even in case of HO and branch services being rendered, even if invoice is not raised, that invoice's value would be considered to be nil. And it says the same analogy should apply to related parties, and therefore for import of services from related parties, same analogy will apply, right? However, in our view, there are certain intricacies. Rule 28, that is the statutory rule, right? Circular is not a notification. It is a clarification binding on the officers. Rule 28 talks about only one scenario where the value of the invoice would be considered to be the open market value. It says that in case of related parties or distinct person, branch or HO, if you raise an invoice, value of invoice would be nil, right? And Circular 199, which is binding on the officers, it says that where no invoice is registered, then in such cases, the value would be considered to be nil. So, HO and branch, that is very clear as per second provision to Rule 28 and Circular 199 that whether or not the branch is getting the input tax credit, even if invoice is not raised, the value would be considered to be nil, no GST. However, that Circular 199, it is not for related parties. Circular 210 says that it is for related parties, but there it is not mentioned anything. And Rule 28 says that invoice needs to be raised. If invoice is raised, then value would be considered as per invoice. Furthermore, it talks about related parties. Therefore, in our view, for related parties, other than HO and branches, invoice should be raised. Whatever may be the value of the invoice, and thereafter you can go for second provision to Rule 28. As I said, the word full is very important. And for related parties, where ITC is not available, say for an alcohol company, where ITC is not available for related parties, not for HO and branch, where ITC is not available, in that case, we feel that this circular 199 may not come directly to your rescue. Indirectly, yes. As per circular 210 read with circular 199 may come to your rescue. As per the rule 28 may not come to your rescue. So in such cases, the position should further be seen. The word full is also again important. The word full means full input tax credit is eligible. But does it mean that out of this input tax credit, even part is reversed because of rule 42, 44, 43? Voice is breaking. Is my voice fine, Avi?
Yes, sir.
Is
Yes,
it
sir.
breaking?
No, it is fine currently.
Okay, it is fine. Please check the connection at your end. So it is very important, friends. This full word that may further be dwelt upon, but as of now, we feel that availability is important of ITC. It is not about the proportionate reversals. So in such cases, now the next question comes. In this Mahindra case, the department has also argued on the basis of the Tata model, where they charge 0.25% of the revenue as royalty for the usage of the Tata brand. Would that be considered to be a benchmark of open market value? That again needs to be taken into consideration. So while this Mahindra case, it gives a relief so to say, but it does open certain questions which industry should answer and be prepared so that in future they have the answers ready in case such questions are asked. A very, very important judgment in the case of Indian Medical Association by the larger bench of the Honorable Kerala High Court. So a lot of action in Kerala High Court. And after this Indian Medical Association judgment of the larger bench, which held Section 7, subsection 1, clause AA, and the explanation to be ultra-virus, various non-profit organizations, associations, who are not even clubs, they have come to us, senior consultants, they have discussed that whether all associations who are charging GST to their members, they should stop payment of GST or at least start paying GST under protest. In our view, this step needs to be taken with adequate precaution because this is a High Court judgment. Department can go to Supreme Court against this judgment. We have very recently seen in the case of safari retreats, years of litigation, and then law is changed. Department went even for review of the Supreme Court judgment. So precaution should be there. And the judgment should be read. Also, the stand taken in income tax, in case you have an income tax exemption. I will come to that because we have reviewed positions very closely for all associations. So even tomorrow going forward, your position in income tax should be in sync with GST. We will tell you why. So section 2, subsection 17, definition of business, clause E, it says, provision of facilities or benefits by a club or such association to its members would be considered to be business. So it is not an activity by a club for its members which is business. Any facility provided by club or association to member would be considered to be business. Section 7(1) AA, which is inserted with effect from 1st of July 2017. Retrospectively, it states that the activities or transactions, the word transaction is very important. Activities or transactions by such a person, that is club, association, etc., to its members for consideration would be considered to be as a supply. And very important explanation on your screen. It says for the purpose of this 7(1) AA, it is stated that notwithstanding any law for the time being in force, any judgment of the Supreme Court also, and any transaction between the member and the association would be considered to be between two separate persons. And such transaction would be deemed to take place from one person to another. So two times in the same explanation, the word deemed has been used twice. It is deemed that there are two different persons, member and association are two different persons. It is deemed that such a transaction is considered between one person to another, right? So friends, any transaction on your screen 7(1) AA, very recently certain members of an association, it says when you are receiving certain money from us, why don't you call it donation? So mind that any transaction, this donation might also come within the purview of a transaction, may not come within service, but careful. Any transaction, even as a pure agent, may be between a member and an association may be considered to be as a service or supply. Law of mutuality, that has been argued in the judgment. Law of mutuality is a constitutional law which has been accepted by the Honorable Apex Court in the case of Calcutta Club. So law of mutuality. Screen has gone. I'm resharing the screen. Screen is visible, Avik?
Yes, sir. Now it is.
Yeah. So law of mutuality on your screen. Explanation you can see in red. Any other law. Law of mutuality. That also this explanation negates. It was argued whether a law, CGST law, can override even the Constitution, which accepts law of mutuality. And it says that plurality of persons is required for a service to happen. That is, for a service to happen, two persons are required. When Supreme Court Constitution says that in a service under Article 366, the sub-article 26 capital A, where it is said for a service to happen, two persons are required. Then whether CGST Act can override Constitution also, that was a question asked. The Honorable Kerala High Court has held that on the basis of mutuality, on the basis of doctrine of mutuality, Kerala High Court has held in the case of Indian Medical Association that members and club cannot be considered as two different persons, and therefore service cannot be considered to have taken place between member and a club, and therefore this section 7(1)AA itself is constitutionally ultra vires. No question of retrospective application. In 2024, the single bench of the same High Court has said that 7(1)AA is not ultra vires, but retrospective application should not be done. But here, division bench, larger bench has said even retrospective application, even the 7(1)AA is constitutionally ultra vires. So friends, in our view, while for the clubs, it is very clear, those clubs which are going on constitution on the doctrine of mutuality, even in income tax, those who are in litigation, always the tribunals and the High Court will ask you, are you going on concept of mutuality or not? If you say yes, they will hold on the basis of concept of mutuality. If you say no, then you go to section 2, subsection 15 of Income Tax Act on charitable activities. And thereafter the courts will dwell upon 215. So in income tax, if an association has taken the plea that they are not going on mutuality and they are going under 215, then they cannot take the shelter of this Indian Medical Association, is our view. They must revisit their stand in income tax also when they are trying to take shelter under this judgment. Because Indian Medical Association judgment is absolutely on concept of mutuality, plurality of persons in case of service, right? So other associations, non-profit organizations should dwell upon this fact. A question was asked by a real estate developer that see this retrospective application to division bench has also said that retrospective application cannot be done. Even single bench of Kerala High Court has said retrospective application cannot be done. So can I use the same analogy in 17(5)D Safari Retreat case? Let's see, retrospective application of amendment to 17(5)D is ultra vires. It may look similar, But again, one needs to revisit the stand because the honorable counsels, in my view, have themselves argued in this Indian Medical Association case, the counsels for the petitioners. They said that retrospective application in a tax law is fine, provided that it is to rectify a mistake in a law. And in 17.5D case, retrospective application has been done only to rectify the mistake in 17.5D by reconstituting plant or machinery as plant and machinery. Therefore, again, such stand may be considered. And as I said, before you take a stand, you must also consider that department may go to Supreme Court. GST rules have been notified, right, from 24th of April 2025. Few issues for industry, as I said, I will not go from the advocates and representatives and chartered accountants, cost accountants point of view. We will discuss from industry point of view. So mode of filing of GST appeal, that is online, right? You cannot file offline. Time of filing within 90 days when President enters office. So the date will be notified when President enters office. Within 90 days, you have to file your appeal before the tribunal, GST. Therefore, industry should be ready with their appeals. Interlocutory applications. What are interlocutory applications? If you want to go for stay, if you want to go for condonation of delay, so condonation of delay, don't file in one application. Make two different interlocutory application for condonation and a separate application for merits. First, condonation will be heard. Amendment to pleadings or interim relief applications, they have to be separate applications. Replies, in case the department files an appeal against you where you have got a positive order from the first stage, you have to file a reply. If the department has filed a reply, you can always file a rejoinder or cross objections. So be aware of this, right? Whenever department files a reply, please ensure you file a rejoinder or cross objections. When department files an appeal against you, do file a reply. If you feel your matter is very urgent, then you might mention, like you mentioned in High Court, if you have not taken a particular point before the first stage, if you want to take it before the GST, then you must crave leave from the court to present such a new point. A wakalatnama along with Form 4. This is for the councils, and if you are representing through your own employee or chartered accountant or cost accountant, not only wakalatnama, Form 4 is also important. So be aware of this. Otherwise, there will be a deficiency memo. Very important is the power of GST. In addition to confirming, modifying, or quashing an order, is also to remand back, which is not in the powers of the first stage. So important is remand back. You can also pray for remanding back before the GST. Adjournment, you should pray for adjournment, if any, through interlocutory application before the bench. But registrars may also be delegated these powers to adjourn. Transfer of all pending cases before High Court, right, may be transferred to the GST once GSTs are formed. Therefore, you may take a call wherever you are going. You have gone to the High Court. try to mention your case and try to get it disposed of by the High Court at the earliest possible. Otherwise, there is a chance that the matters might go to GST. They might be transferred by the High Court to the GST. So, for your High Court matters, please prepare accordingly. Please be ready to pay fees of pre-deposit. If you have not paid the pre-deposit already, filing fees is from 1,000 to 25,000 rupees. So calculate your fees appropriately so that there is no the deficiency memo. The hearing of the GST would be in physical mode. We suggest always physical mode, but it can also be done on electronic mode. But for electronic mode, you have to pray, right? So most important is to get your petitions ready quickly in the respective APL 04 form, in the respective grounds and facts. All should be ready so that the moment it is formed, the website is already there. You can immediately file your case. The faster you file your case, the faster it will be heard. Each order in original would require appeal, right? So as many OIAs, as many appeals, there are various forms. You will get this PPT. So please prepare accordingly. Customs duty on pre-import and post-import activities. Where very recently the Honorable Apex Court in the case of Coal India Limited, a PSU, they went up to the Apex Court, right? And in the important thing in this customs case, which is important for all the importers, is at every stage, Commissioner Appeal Tribunal, High Court, at every stage, the petitioners have got their orders confirmed, right? And even the Honorable Apex Court has confirmed the order of the High Court. What was the dispute? The dispute, you see, as per Rule 9 of the Customs Valuation Rules, read with the notes, in case you have a pre-import activity, the value of the pre-import activity has to be added to the cost of the goods or the value of the goods, and customs duty need to be paid. In case there is a post-importation activity like transportation from the port, etc., in such case, no customs duty would be applicable on such activity, including it in the valuation of the activity of the goods. Now, in the instant case, Coal India Limited has imported certain goods, and the exporter, foreign party, has an agent, Voltas Limited. What does that agent do? It sees that various goods are available with the Coal India Limited or not, and it ensures that the replacements are there. It does the port activities, everything it does. And that activity is mentioned in the purchase order. And the value of that activity is 8% of the FOB value of the goods. Coal India argued on notes to the valuation rules, and it says this is a post-import activity. The Honorable Apex Court has held that no, it is a pre-import activity. It has a very close nexus to import. Many of the times, various taxpayers also try to disclose a pre-import condition as a post-import activities. This judgment of the Honorable Apex Court in the case of Coal India Limited on this valuation for post-import and pre-import condition, that is very important to take cognizance of and accordingly deal with the situation. Various other important judgments are there. We'll go through them for 5 minutes and then we'll take the questions. The Honorable Apex Court in the case of Raghav Agarwal has held that Rule 86A for blocking of input tax credit ledger, that blocking can be done only of the credit. Say credit in input tax credit ledger online is 100 rupees. The department cannot charge 110 rupees and make the ITC ledger itself negative. That has been upheld. The department was resorting to such activities, and this under Apex Court judgment in the case of Raghav Agarwal would now make things very clear. No negative input tax credit ledger. Well, very important. You see, this is again and litigation is an art. The Honorable Gujarat High Court has held in a very important judgment. In what happened in this case is mover license of Deepak Fertilizers was rejected by the commissioner, stating that because a GST demand was there which was appealed against, a customs demand was there which was appealed against, the commissioner held that mover license would not be denied because Deepak Fertilizers, the party, was a offender. It has an offense in its name, and therefore mover license was denied. The Honorable Gujarat High Court says that it is not an offense. It is a contravention. A contravention is a mere allegation which is being contested by the taxpayer. An offense is an admitted allegation. So, in case it is a crime, it is an admitted crime, offense. So, the Honorable Gujarat High Court has distinguished between offense and contravention. And therefore, it has held that mover license should be granted if all other grounds are fulfilled. What understanding should other taxpayers take from this? You see, almost all cases, the department in GST invokes section 74, in customs invoke 28(4). They invoke the larger period of limitation. In such cases, if you are admitting that penalty, then you are an offender. But if you are contesting, then you are a contravenor. So, you must take a decision accordingly as a taxpayer. Well, very recently, even in one of our cases, you see, there was a stock difference and there was a summon on stock difference. The officer says that, gentlemen, we will issue you an ASMT 10 for stock difference, and thereafter we will issue show cause. It is not the correct way. ASMT 10, section 61 can be issued only in case of there is a difference in which has been found on scrutiny of return. For valuation, stock differences, these kind of cases, ASMT 10, section 61 cannot be invoked, as was held by the Honorable Jharkhand High Court in the case of Sri Ram Stoneworks. So if you get such an ASMT 10, it would be considered void ab initio. So last, you see, many of the taxpayers, those who are not registered in central excise, even sometimes I would beg to say many of the experts also have a confusion. See what happens in many of the cases. I would give you a small example and explain this case. What happens is you as a principal, you will give certain material to the job worker. The job worker will use that material and give you the finished product. The value of this input has to be included in the assessable value, right, of the job worker. That is the law. Sometimes what happens, you give a product to the job worker retains some part of the product, the scrap, it sells it separately. The value of that scrap which the job worker has sold separately and it has retained, that has to be included in the assessable value. Even if you are paying the job worker less, Assessable value has to be more on which GST needs to be paid. That has been held in various judgments. It was a very clear rule in central excise that has been held in case of high energy battery by appellate advanced ruling authority also. Many of the times the taxpayers say that, see, why to double tax? If that value of the material is included in the value of the job worker, I am paying double tax. Because when I am selling the finished product, I am paying tax on the full value. That is not the case. You have to understand the job work provisions. This is a very clear mandate of law. There is no double taxation also, right? If you break down the transaction, you sell a particular product to a job worker purchases, uses that product, includes it in his taxable value of his suppliers. So if you break down, you will see by yourself there is no double taxation in this. So that is the clear mandate of law also. And whenever you are valuing job worker services, then such rules should be followed. So friends, this is from our side. And now we will take the questions in the chat box. Okay, Mr. Ritesh Kumar Goyal says, what is the logic behind drafting rule to distribute credit in the same month? See, the department, you see, whenever there is a delay in compliance, always there is a risk attached to it. And therefore, the department, the parliament in its wisdom and the GST Council in its wisdom may have thought that there should not be any delay in compliances, and therefore they may have drafted this rule 39(1)(a). Even if someone is not able to distribute, can department still disallow the credit to the recipient just because procedural lapse? In my view, there might be a dispute, but of course there is a case that it is a mere procedural lapse, and procedural lapse cannot result in denial of a substantive input tax credit claim. Mr. Singhania says, how to distribute HO rent or audit fees to branches? Whether we have input but there has been no revenue in the previous year. We have input but there is no revenue in the previous year. So you are saying if the branch does not have revenue in the previous year. So you have to see the last quarter where there is revenue. If there is no such revenue going forward also, then wherever in the branches there is revenue, then you have to distribute, or you have to wait until there is a revenue. If there is no revenue, then this ITC lapses, in my view. But this, I feel, is a hypothetical scenario. You might revisit this. CMA Kandoi says, how HO rent to be distributed through ISD or cross charge? Of course, through ISD. How rent can be distributed? It is a question of place of supply. You see, it is very clear in Rule 39. C plus S will be distributed as I. Mr. Bharat says whether HO rent to be distributed also on non-GST like salary. Yes, HO rent is to be distributed. I have already clarified. Other non-GST like salary, cost of common centralized function, these are all internally generated services. So as has been clarified in Circular 199, internally generated services may not be cross-charged. No question of ISD distribution because there is no ITC at all for internally generated services. Mr. Ajay says, suppose one of the registration in financial year 24-25 is cancelled in March 25 and in FY 25-26 we need to distribute on the basis of last year turnover. As per Rule 39, then how can we calculate the ratio for distribution of ITC in the current financial year? See, if the registration is already cancelled, then you cannot distribute to that registration. You have to distribute to other registrations. Mr. Bharat says RCM distribution, there will be month lag in payment of RCM under 3B. There will be month lag. I think lag will be lag. Lag in distribution of RCM under 3B of HO, GSTN and distribution of ITC claim by recipient in subsequent month. See, number one, in my view, RCM credit can be taken in the same month, right? It is very clear. So there is no question of month lag. But if there is a month lag also, then you can take shelter under the word available. Under Rule 39(1)(a), you can say that ITC was not available in the same month because of the procedures which were followed, because of the self-invoice which was issued afterwards under Rule 31(3)(f). Mr. Abhi says whether bank charge utility services to be distributed. Of course, if it is a common services, it needs to be distributed. Mr. Sumit Das, is it ITC available in 6A but not recorded in books? Then we should distribute. If it is not available, if you feel ITC does not belong to you, even if in 6A, should not be distributed. Mr. Ajay says whether HO expenses such as repair of building, rent, housekeeping services incurred in HO needs to be cross-charged because HO is support office for all. In my view, these are third-party services, cannot be cross-charged, should always be distributed through ISD in case ITC is available. Mr. Prakash says RCM IGST credit can be transferred from regular to ISD GSTIN. Both are in the same state. Yes, that is the procedure envisaged under Rule 39 Subrule 1A, read with Rule 54 Subrule 1A. Mr. Abhi says if there are different HSN codes involved, then also only one such invoice needs to be raised. Yes, one invoice for ISD. Mr. Singhania says, do we need to take ISD registration if there are two registration West Bengal in Delhi, but there have been no transaction in Delhi for last 5 years? You see, this is a typical scenario. In my view, ISD registration is a mandate, even if you do not distribute, because penalty under 125 may be invoked. You might contest that penalty, of course, as I have said, but of course, department can ask questions. Any common services obtained in other state of GSTIN, whether ISD registration is not there, can be billed to state where ISD registration is there as per 54(1)(a), or it can be billed in the same state. See, Mr. Ajay, a very good question. Please read the Honorable Orissa High Court judgment in the case of JSW Steel. It is very clear that the provision under 54(1)(a) and 39(1)(a) is only for same state, not for different state. In JSW Steel, they had done this from Odisha, normal GSTIN, they built to HO, Maharashtra ISD GSTI. That was also dismissed, I would say, by the Honorable Odisha High Court. Mr. Dinesh Singhania says whether branch rent or admin expenses also has to be distributed under ISD. As I said, thumb rule is very clear. Third party distributed through ISD, internally generated, not required. Right? So from what we understand, these are the third party services need to be distributed through ISD. Mr. Naik says how it is possible to reconcile HSN code if dealing with trading and works contract and AMC business. Yes, for trading it is simple, I would think, because you are doing no value addition. For works contract, difficult and very important that you have raised for works contract. When works contract, we need to be more careful after this HSN code have come, because in works contract, the even stock registers are not there, right? So you have to be more careful to see that you have the right utilization certificates for the stocks at different states, right? If there is no movement of the stocks, be careful not to take input tax credit. That is an offense under Section 122 and Section 132 of CGST Act. My query is GST is available only applied on additional value add by each business, effectively removing cascading effect. But how is this statement holding value in case of import customs, since GST is charged only on value plus customs duty or taxes levied by customs? You see, Rule 15, Section 15, if I understand your question clearly, Mr. Tarun, you are asking that why should GST be levied on customs duty? So, Section 15 is very clear that even on duties part, the duties would also be considered to be a part of the value. So, GST needs to be charged on that. That is the law. The logic is very clear that GST would be on the transaction value. Whatever amount you spend to bring the goods to the present location and condition, right? You have read Accounting Standard 2. The norm is that whatever expenses, including taxes, you incur to make the goods in the saleable condition or make the goods in the condition of the taxable event, import in this state, in that case, all such expenses, including taxes, need to be included in the transaction value. Mr. Subhas says e-invoicing is required. ISD distributed. Oh, e-invoicing for ISD invoicing. Yes, required. Mr. Ashok Jha, suppose APL2 is not issued by appellate authority for want of mandatory pre-deposit. Then you can do it online, Mr. Jha. No need of going to the appellate authority for withdrawing your case. If someone paid interest and penalty against department order earlier, they are eligible to apply under APL scheme. I think you are talking about amnesty scheme. But if you have already paid interest and penalty, so you want to go under amnesty and pay off the taxes. Yes, of course, but you do not get the interest and penalty refund. Mr. Bharat says whether NBFC fall under Rule 28 full input tax credit valuation has a nil value. Very, very good question, Mr. Bharat. Well, this is my question also. Whether the word full would mean NBFCs and banks, which as per this Rule 28 are required to reverse 50% of their input tax credit. Very good question. This is my question also. Till date, you see, we are also, thinking about an answer. In my view, it can be contested. In my view, the word full would not encompass NBFCs, and therefore NBFC would also come under Rule 28. Mr. Niket says whether for cost cross charge, this judgment is useful for services to persons are required, and cross charge there is only one corporation. Mr. Niket, please don't go for Indian Medical Association judgment for cross charge, multiplicity of people. You are very right that the analogy can be applied, but a lot of water is to be flown under the bridge. It is a very, very well argued judgment, case. You see whether or not you would be able to argue your case as such, and if the analogy of this judgment you are able to apply, you will apply for cross charge successfully, then the entire foundation of the GST law would be shaken. Therefore, early days, if this analogy of Indian Medical Association needs to be applied for cross charge. Okay. Mr. Tarun says one more query requesting your experienced view. If party has selected RCM category in the beginning of the year, he cannot charge FCM for GTA, right? Consequently, any ITC directly available to GTA service is not available under section 17. 3. Further, we require if there is in the case law satisfying. Mr. Tarun, you have to be clearer. Your question is not very clear. HO rent is to be distributed through ISD. I have answered this. E-invoice is required to ITC. I have answered this. What is the way out for ITC distributed through to SEZ under ISD? Please take a refund of that. We have received APL 02. We have received APL 02. Can we file withdrawal of appeal online through portal before applying for amnesty? Yes, you have to. You have to apply through portal and thereafter you have to go to the first stage authority and get your appeal withdrawn. Mr. Kantilal says if branch is established in this year, then how do we distribute? As I have said, you have to take the last quarter where turnover is available and distribute accordingly. Can ITC be distributed with increased margin on stock transfer of goods? Yes, 110% is the norm. Even more than 110% you can distribute depending upon the valuation rules. How HO rent are to be distributed as services in relation to immovable property? It is as per Rule 39. Self-invoicing is mandatory for RCM? Of course, yes. Section 31(3)(f). Whether lawyer fees is a common fee, even if lawyer is related to contract of a particular state. So from you have already answered your question, Mr. Dinesh. If the lawyer is for contesting, say, a particular state's matter only, it is not a common fees. Mr. Indani says invoice booked for ISD in the books in March, but the same is available for credit in April month, then distribution should be done in March or April. So as I said, under this word available, Rule 31, Sub Rule 1, Clause A, you would be covered and the ISD ITC should be distributed in your case in April because it is available in April. In case of ITC distribution, do we have to distribute related cost, which may have different HSL? Mr. Abir, you need to be clear. What do you mean by related cost? Do we have to distribute related cost? Common credit you need to distribute. Mr. Prakash says purchase order issued in Jan 25 valid up to June 25. It is common services during the transition period. Can we get the bill to regular GSTIN and transfer to ISD through 54(1)(a? In my view, may be litigated. 54(1)(a is only for RCM, not for normal, right? May be litigated, but you can take shelter under the doctrine that a procedural lapse cannot deny a substantive claim. Mr. Ajay says it is mandatory for RCM cases that we do invoicing under 54(1)(a. Can be done in the same state ISD or for RCM interstate billing is allowed? No. As I've again and again said, RCM billing also under 54(1)(a and 39(1)(a only in the same state, not cross state. Again, for cross charge, is this judgment? So, Mr. Nitesh, I says no. In my view, no. early days, very early days, to create such a big, dispute under GST. If what you say is to be accepted, then the whole fundamentals, the whole foundation of the GST law would be shaken. So early days, I would say, just on Indian Medical Association, the dispute of services and the question of plurality of persons in case of services, to shake up the cross charge or mechanism, that would take some doing and some arguments. Mr. Dinesh says, please give your view on full credit eligibility in case of real estate developer business where parent company invoicing for branding to group company running mall on leasing, where mall company raising invoice to tenants for leasing as well as electricity as exempt. The business of mall company is leasing only, whether the credit of brand name available to parent company. So, Mr. Dinesh, very good question. As I said, the word full is critical. As of now, the department is taking the view that the word full, like I answered for NBFCs also, would not mean a proportionate reversal as per Rule 42, right? And ITC would still be available, right, under second provision to Rule 28. The valuation would be acceptable. So, and ITC would be available or not available accordingly. But to interpret the word full as not being available, even if there is a Rule 42 disallowability, as in your case, in such cases, you see, that would mean that the entire Rule 28 second provision is shaken up. That would require some argument from the department also. Further, in your case, if you are a real estate company, you are charging electricity on a reimbursement of electricity. Mind that it is not an exempt supply. I am repeating, electricity reimbursement by not charging GST on pure agent concept is not an exempt supply. It is a no supply. Rule 42 disallowance would not apply for reimbursement of electricity and non-charging of GST on reimbursement of electricity under pure agent concept. I hope I have adequately answered your question. Mr. Prakash says RCM vendor Tamil Nadu issues invoice to Karnataka. IGST paid under RCM in Karnataka regular GSTIN. RCM vendor Tamil Nadu issued invoice to Karnataka. IGST paid under RCM in Karnataka. Transfers from regular. So, I have already answered Mr. Prakash. Interstate Rule 54(1)A is not applicable in my view. Should we maintain separate accounting of ISD since ISD GST number is different? You see, by separate accounting, if you mean a separate code in your SAP, I would say yes. A separate code in your tally, I would say yes. That would be the most simple way of accounting. ITC on hotel tariff is under ISD. Yes, can be distributed if it is common credit. For distribution of invoices, e-invoices required, yes. As said, even if you're consumed in HO only, even your answer to distribute HO through ISD is not correct because renting services are consumed at HO only. Well, yes, you see, your view is that renting is consumed in HO. In my view, the HO is servicing all the branches. So in my view, it can be distributed, but yes, you can, you can consider your case. Employee of one state travel to other state for official work, only normal registration is there. ISD is not there in such state. ITC can avail. See, Mr. Dinesh, I understand your problem of hotel accommodation you see whether it is common credit or not, and it is not possible to take ISD in every state. I understand it is a procedural issue. My only submission legally is you have to see whether it is common or not common. If it is common, ISD; not common, then cross charge, internally generated cross charge. So you have to take a decision accordingly. So thank you very much, friends, and we have answered all your queries. Of course, there might be different views which people might take, but in our legal submission, we have submitted all our replies accordingly. Thank you very much. We look forward to your participation in our future colloquiums, even on direct taxes. Thank you very much. Over to you, Samir.
Thank you, Vivek, for this wonderful session. Very patiently answering all the queries that were raised, and detailed discussion of all the subjects that was part of the agenda. Uh, Thank you, participants, for joining us. We look forward to your participation in the next colloquium, which we conduct mostly once a month. So, with that, we close the session. And for all the GST updates and GST case laws, please keep visiting VIL site. Thank you. Over to you, Deepa.
you. Thank you, Vivek sir, for the wonderful deliberation. Thank you, Samir sir, from VILGST for coordinating with us. Thank you all the participants for attending the webinar. We conduct such webs every month, and we hope we'll get you in the upcoming webinars as well. We'll shortly be sharing the PPT and video link to all the participants. Thank you all once again.